In a world where financial trends change every second, the idea of real and sustainable growth has become rare. Many investors chase instant success, yet few focus on the foundation that creates lasting results. Genuine value, a portfolio built on real assets, steady progress, and ethical decision-making often outperforms those driven by speculation or short-term excitement. This is the story of how an equity-focused portfolio achieved consistent growth by staying grounded in fairness, responsibility, and productive investment. Real value begins with understanding what you truly own. An equity portfolio, when designed around companies that produce tangible goods or valuable services, becomes more than a collection of stocks. It represents participation in meaningful enterprise. Every share reflects ownership in an organization that contributes to society through work, innovation, and service. Instead of chasing illusions of quick profit, this portfolio's strength comes from aligning wealth with actual productivity. The foundation of any lasting portfolio lies in balance. Rather than following market noise or trends that change with every headline, this approach relies on measured choices. Each company included in the portfolio was selected after examining its real operations, transparency, and long-term contribution to the economy. Businesses that maintain integrity, treat employees fairly, and provide real benefits to their customers form the core of such a strategy. These values ensure that the portfolio grows not only in numbers, but in purpose. Growth achieved in this way is steady because it is built on trust and truth. When a portfolio is connected to genuine companies that create real goods and services, its growth reflects authentic progress in society. Such investments avoid involvement in industries that profit from harm or uncertainty. The objective is not to grow wealth at any cost, but to align financial gain with benefit and stability. An important lesson from this approach is patience. Real value does not appear overnight. It builds gradually through consistent effort, discipline, and long-term thinking. Many investors become impatient when markets fluctuate, but those who stay committed to sound principles find that time becomes their greatest ally. Instead of reacting to every rise or fall, they view investing as participation in growth itself, the growth of businesses, workers, and communities. To achieve steady performance, risk management becomes essential. The portfolio avoids concentration in uncertain sectors and instead diversifies across stable, productive fields such as manufacturing, technology, healthcare, and sustainable energy. Each sector offers potential grounded in real-world needs. This method prevents overexposure to volatile industries and supports companies that contribute to human advancement. Transparency plays a crucial role in maintaining strength. Understanding where each investment stands and how it performs allows for informed decisions and adjustments. Every part of the portfolio is monitored with honesty and care, avoiding hidden mechanisms or complex instruments that disconnect value from reality. In this way, the portfolio remains both clear and accountable. True wealth creation is linked to contribution. When an investor supports businesses that build, employ, and serve, the returns extend beyond numbers. A responsible equity portfolio becomes a force for good, channeling capital into innovation, job creation, and community development. It reinforces the idea that financial success is not separate from social well-being. This focus on real value also protects against harmful speculation. Markets often fluctuate due to rumors, emotions, or sudden trends, but a portfolio built on solid fundamentals resists such instability. It does not depend on manipulation or uncertainty to rise in value. Instead, its progress follows the natural rhythm of productivity and demand. Over time, this stability becomes its greatest advantage. Another important element is accountability in decision-making. Every investment decision in the portfolio is guided by clear analysis and responsibility. Emotional decisions, influenced by greed or fear, are avoided. By replacing emotional reaction with discipline, investors protect both their capital and their peace of mind. This mindset transforms investing from a game of chance into a thoughtful, purposeful practice. The idea of steady growth challenges the notion of endless expansion. Instead of measuring success only by how fast wealth increases, this approach values how sustainably it grows. The portfolio measures achievement not in sudden spikes, but in consistent upward movement supported by genuine progress. It mirrors the rhythm of real life, where progress built slowly and honestly lasts far longer than what is gained overnight. Community impact also strengthens the portfolio's foundation. Investing in companies that respect workers, care for the environment, and serve people responsibly ensures that wealth benefits everyone connected to it. This cycle of fairness and contribution creates a kind of growth that uplifts rather than exploits. A portfolio designed this way represents not just ownership, but partnership with those working to build a better world. Long-term resilience depends on knowledge. The more an investor understands about the companies they support, the stronger their confidence becomes. This knowledge guards against panic in uncertain times. Understanding how value is created through effort, innovation, and service allows investors to stay calm when markets are unstable. They know that real value cannot vanish with temporary decline because it is tied to something genuine. Performance evaluation remains an ongoing process. Instead of comparing results to short-term benchmarks, the focus stays on whether the portfolio continues to reflect true productivity and stability. This approach discourages blind competition and promotes self-improvement. By concentrating on long-term outcomes rather than immediate comparison, investors find satisfaction in progress built with integrity. Steady growth is also deeply connected to discipline. Regular review, patient adjustment, and consistent reinvestment all contribute to compounding success. The portfolio's manager avoids excessive turnover and unnecessary risk, focusing instead on gradual improvement. Each small step, repeated over time, creates exponential results that last. In the end, a real value equity portfolio stands as proof that ethical and thoughtful investing works. It shows that steady progress can outperform reckless ambition, and that wealth rooted in fairness endures beyond cycles and crashes. By choosing to invest in what builds rather than what deceives, investors can create both financial security and positive change. This journey is not only about earning returns, but also about redefining what it means to succeed. When a portfolio reflects responsibility, fairness, and purpose, it becomes a reflection of real growth, the kind that benefits both the investor and the world around them. Sustainable growth in an equity portfolio requires more than market knowledge. It requires purpose, patience, and principle. Building wealth through genuine value means understanding that every financial decision has an impact beyond the balance sheet. When investments align with responsibility, transparency, and service to humanity, they produce results that endure across changing economic cycles. The real strength of such a portfolio lies in how it grows steadily, through clarity and honesty, without depending on shortcuts or artificial means. A portfolio grounded in real value begins with selection, the careful identification of companies whose work adds lasting benefit to society. Instead of chasing temporary market trends, the focus stays on enterprises that deliver something meaningful, technology that improves lives, manufacturing that creates jobs, healthcare that promotes well-being, and services that build communities. Each chosen company becomes a piece of a larger vision, a vision of sustainable progress built on effort and contribution. The foundation of steady growth lies in understanding value beyond price. Market prices fluctuate daily, but intrinsic worth is constant. An investor focused on real value learns to separate emotion from evaluation. The goal is not to guess the next price movement, but to recognize the true capacity of a business to create benefit. This mindset transforms investing from a pursuit of gain into a disciplined partnership with progress itself. Transparency remains the cornerstone of trust. A real value portfolio avoids complex financial instruments that obscure ownership or create uncertainty. Instead, it relies on clear, straightforward investments tied directly to productive enterprises. This openness ensures that every investor knows what they own, why they own it, and how it contributes to the broader economy. Through such clarity, the portfolio remains both accountable and resilient. Patience plays a central role in this philosophy. Markets may rise and fall, but genuine progress happens over time. Companies that grow through dedication and service require space to mature. By maintaining a long-term outlook, investors allow the natural process of development to unfold. This patience shields them from panic during volatility and keeps them aligned with the enduring rhythm of growth. Another defining element of success is diversification. A well-balanced equity portfolio does not depend on a single industry or region. Instead, it spreads investments across multiple sectors that reflect real economic demand. Industries such as energy, technology, agriculture, healthcare, and education provide diverse opportunities for value creation. Each sector moves differently, and together they form a stable structure that supports consistent performance even when some areas face challenges. Ethical stability also arises from fair participation. Investors who support companies that treat workers well and respect the environment contribute to a cycle of positive growth. Responsible corporate behavior enhances reputation, strengthens loyalty, and leads to steady returns. Such companies attract committed employees and conscious consumers, forming a base for sustainable profit. When investors prioritize these qualities, their portfolios reflect not just financial potential, but moral strength. The decision-making process is guided by analysis rather than emotion. Every purchase or sale is supported by research into a company's real capabilities, financial health, and contribution to society. This disciplined approach eliminates the influence of greed and fear, the two emotions that often disrupt judgment. Instead of following market noise, investors act on evidence and reason. Over time, this rational mindset produces more stable outcomes than reactive trading. Financial discipline also includes regular evaluation. Reviewing performance allows investors to identify strengths and weaknesses in the portfolio. It is not about chasing the highest short-term gains, but ensuring that each component continues to reflect true value. If a company begins to drift from its core purpose or loses transparency, adjustments are made carefully, maintaining the portfolio's integrity. Steady growth depends on reinvestment. Instead of withdrawing every profit, a portion of earnings is returned to the portfolio to strengthen its base. This process of compounding multiplies the effect of disciplined investing. Each reinvested amount becomes a seed for future returns, creating momentum that builds year after year. In this way, time becomes the most powerful ally of real value investors. Another key lesson from this strategy is resilience. When markets face downturns, speculative portfolios often collapse because their foundations are weak. In contrast, portfolios based on real value withstand turbulence because they are supported by genuine assets and productive activities. Companies that produce real goods and services continue to operate, employ, and generate income even during difficult times. This practical connection to reality protects investors from the extremes of uncertainty. Clarity in purpose also strengthens confidence. When investors know that their portfolio contributes to meaningful work, not to exploitation or waste, they find satisfaction beyond numbers. The feeling of supporting progress that benefits others gives financial achievement a deeper sense of fulfillment. Wealth becomes more than accumulation. It becomes participation in collective growth. Another significant element is moderation. Real value investing avoids extremes, neither reckless risk-taking nor excessive caution. Instead, it follows a balanced path guided by logic and awareness. This equilibrium ensures that capital remains active without being endangered. The objective is stability with progress, not sudden gains followed by loss. Such balance reflects maturity in both thought and action. A real value portfolio's strength also lies in adaptability. The world changes, technologies evolve, consumer needs shift, and markets transform. Instead of resisting change or chasing every new trend, the portfolio adapts selectively, embracing innovations that align with productive and responsible principles. This flexibility allows it to grow alongside advancement while avoiding the instability of speculation. Communication between investors and companies further enhances growth. When shareholders engage constructively with management, they encourage better governance, accountability, and transparency. This dialogue ensures that businesses remain focused on long-term benefit rather than short-term pressure. As a result, both sides prosper. Investors through returns, and companies through trust and stability. Education remains a vital pillar of success. Investors who understand financial principles and economic systems make wiser choices. Continuous learning prevents mistakes and opens new opportunities. Knowledge also builds independence, the ability to think critically rather than rely on external predictions. In an informed portfolio, every decision is intentional, every risk measured, and every success deserved. Sustainability becomes a natural outcome of this approach. When capital flows into enterprises that create positive value, it strengthens entire communities. Jobs are secured, resources are used wisely, and innovations emerge that improve lives. This connection between investment and societal benefit transforms finance from a private pursuit into a shared achievement. Emotional stability complements financial discipline. Markets test patience with uncertainty, but the investor grounded in real value remains composed. They understand that setbacks are temporary and that true progress comes from perseverance. This emotional balance mirrors the portfolio's structural balance. both built on awareness, patience, and conviction. Over time, a pattern emerges: consistent, dependable growth that mirrors the natural progression of productive work. Each quarter and each year reflect not sudden spikes, but steady upward movement. This rhythm demonstrates that the foundation of real wealth lies not in speculation, but in contribution. The portfolio becomes a living example of how responsibility and integrity lead to prosperity that lasts. As the portfolio matures, it begins to compound not just returns, but impact. The businesses it supports expand their reach, employ more people, and create innovations that shape the future. The investor's role evolves from participant to partner in progress. This transformation defines the essence of sustainable wealth: growth that uplifts rather than exploits. The real value approach teaches that wealth earned honestly and shared beneficially creates harmony between personal success and collective welfare. It replaces the endless chase for more with the satisfaction of meaningful growth. Instead of seeking to beat others, it aims to build together, producing outcomes that enrich everyone involved. In conclusion, a portfolio built on real value stands as proof that success rooted in fairness and responsibility endures. It shows that growth achieved through genuine enterprise is not only sustainable, but fulfilling. The lesson is clear: when investors align their choices with truth, effort, and service, their portfolios reflect stability, peace, and purpose. This steady growth is not a coincidence. It is the natural reward of disciplined investing guided by conscience. It demonstrates that prosperity can exist without compromise, and that long-term wealth belongs to those who value substance over illusion. A real value equity portfolio does more than earn. It contributes, strengthens, and inspires. It reminds us that in finance, as in life, what is built on honesty will always endure,